ESG, and this is now something that if you want to invest in a company, they'll show you their ESG score. And it's funny because you'll see like Nike has a 75% score. Tesla, which you'd think would be really good, 38. Because, not woke enough, or Elon, says the wrong things.
Picture this. You're sipping on a latte at your favorite coffee shop, scrolling through your investment portfolio on your phone, and feeling pretty good about your ESG picks. But what if I told you that the ugly truth about ESG investing is that it's not all rainbows and unicorns? According to recent statistics, ESG initiatives are commonplace in most public and privately owned companies, and investors increasingly prioritize ESG. But is this just a passing trend, or is something deeper at play? In this video, we'll delve into the dark side of ESG investing and uncover the hard truths you need to know. ESG investing is all the rage these days, and it's easy to see why. It's the hottest acronym since YOLO. But how did this buzzword take over the investment world? And what's the deal with all the hype? ESG started as a niche concept in the 1970s, when a few hippie investors wanted to align their portfolios with their values. But it wasn't until the early years of the 2000s that the idea gained traction, thanks in part to a thing called climate change. The term ESG was officially used in 2004 for the first time in the Who Cares Wins report by the United Nations. Suddenly, everyone was talking about carbon emissions, renewable energy, and saving the planet. Fast forward to today, and ESG has gone from a fringe idea to a full-blown movement. Companies are falling over themselves to tout their ESG credentials, while investors can't get enough of these feel-good stocks. It's the ultimate win-win, right? Who doesn't want to save the planet while also making a profit? ESG stands for environmental, social, and governance, and it's supposed to represent investing in companies that care about the environment, treat their workers well, and have strong corporate governance. But is it really that simple? On the one hand, ESG has its advantages. For starters, it's a way to put your money where your mouth is. If you're passionate about saving the planet or supporting social causes, ESG investing allows you to do that. Plus, it's a way to diversify your portfolio and earn a return on your investment. And with the rising demand for ESG investments, companies are starting to pay more attention to these issues, which can only be a good thing, right? But hold on a second. The same ideas that make ESG so attractive are also its downfall. For one thing, what even counts as environmental, social, or governance? It's not like there's a clear set of criteria that every company has to meet, and there's no governing body to ensure that companies are actually doing what they say they're doing. To make matters worse, ESG investing is often conflated with impact investing, which is when you invest specifically in companies or funds that are working towards a specific social or environmental goal. With ESG, you're just investing in companies that are supposed to be good in some fuzzy way, which doesn't really guarantee anything. And let's not forget about the potential for greenwashing. Companies know that ESG is trendy right now, so they're slapping green or sustainable labels on everything and calling it a day. It's like putting a good old Band-Aid on a broken leg. It sure looks nice, but it's not actually fixing the underlying problem. And finally, let's be real, ESG investing is still investing. It's not a magical solution that's going to save the world overnight. In fact, focusing solely on ESG investing is just another way for the rich to feel better about themselves without actually making any significant changes. Despite all the hype, there are some pretty big questions about whether ESG is all it's cracked up to be. For one thing, it's notoriously difficult to define and measure. Sure, a company might have a great record on environmental issues, but what about social or governance factors? And how do you compare one company's ESG performance to another's?
How did the person who did those scores for Exxon and Tesla, how could either of those companies go, that passes the sniff test, this makes total sense?
Then there's the fact that ESG can be a bit of a smokescreen. Companies know that investors are hungry for ESG investments, so they're happy to slap on a few sustainability initiatives and, call it a day. But are they really making meaningful changes or just playing the game? All this hype has even made its way into politics, with some lawmakers in the United States using ESG as a political football. It's enough to make you wonder. Is ESG really the solution to all our problems, or is it just another way for companies to make a quick buck? Despite these concerns, ESG continues to gain steam. In 2020, ESG-focused funds saw record inflows, with investors pouring over $1.7 trillion into sustainable funds. And it's not just individual investors. Institutional investors like pension funds and endowments are also jumping on the ESG bandwagon. So, what's driving all this enthusiasm? For one thing, younger investors are increasingly interested in putting their money where their values are. Millennials and members of Gen Z are more likely to prioritize sustainability and social responsibility in their investment decisions, and they're projected to inherit trillions of dollars over the next few decades. As this demographic gains more financial power, ESG will continue to grow in importance. Another factor driving ESG's popularity is the growing awareness of the risks posed by climate change and other environmental and social issues. As extreme weather events become more common and inequality widens, investors realize that these issues have real financial implications. Companies that fail to address these risks could face serious consequences down the line. ESG investing sounds like the perfect way to save the world, right? The dark side of ESG investing is shady. For starters, companies love to jump on the ESG bandwagon just to look good. They call it greenwashing, with data showing that most ESG investments are based on greenwashing, and it's the ultimate deception. These companies claim they're environmentally and socially conscious, but they just want to make more money. Another major issue with ESG investing is clear benchmarks and rating agencies. For investors to make informed decisions, they need reliable and standardized information about the ESG practices of the companies they are investing in. However, there is currently no universally accepted standard for ESG metrics, which can make it difficult for investors to compare companies and determine which ones are truly committed to sustainability and social responsibility. There are ethical confusions surrounding ESG investing, particularly with regard to nuclear energy. While some argue that nuclear energy is a relatively clean and efficient energy source, others argue that it poses significant risks to the environment and public safety. This has led to a divide among ESG investors, with some including nuclear energy companies in their portfolios, while others refuse to invest in them. So, while ESG investing may seem like a noble cause, it's not the solution to the world's problems. It's time to think bigger and demand real change from those in power. While ESG investing may seem promising to promote sustainability and social responsibility, it has flaws and controversies, greenwashing, ambiguities associated with investing, the lack of proper benchmarks and rating agencies, and ethical confusions pose significant challenges to the credibility and effectiveness of ESG investing. As such, investors should approach ESG investing with caution and carefully evaluate the ESG practices and ratings of the companies they're considering investing in. Are you invested in ESG funds, and how do you think about the topic? Write it in the comments. Subscribe to Ape Finance for more insightful breakdowns like this. Thanks for watching, and we will see you in the next video.